Florida is making headlines everywhere when it comes to the housing sector in the United States. Florida has been the epicenter of both fair and unfair criticism regarding price drops and inventory levels. It's very easy to create bad news or spread misinformation when Florida has been the focus in some areas for price declines and rising inventory. That's where we see all the headlines. This might be true in some areas, but how serious can it really get? Are we really facing that crash? Should Florida really be the focus that everyone is watching? Or are there cities in Texas that are much worse off than we are? Or, in general, is the United States behaving differently in different areas? We will always bring you here what you need to know. And another major factor you'll have to consider is the issue of insurance. Today, we're going to do a very specific analysis of what's happening in the insurance sector, because there are a lot of people desperate about insurance, especially in Florida, wondering what's going on and how we can look into this insurance issue to pay a little less or see how far this crisis will go and how much further insurance rates will rise. Because there will come a point when you won't be able to buy, not because you can't afford the interest rate, but because insurance will be so expensive that you won't be able to get a new home. We're going to do this in detail, us, the best real estate agents in Florida, with a team that's solely focused on finding this news, analyzing it for you, and bringing it to you every week on our podcast so that you have real, reliable, sourced information. And that way you can make the right decisions when it comes to buying, selling, or renting a home. As always, it's me, Gabriel Peroso, and I'm here with my friend and business partner,
Yenny MOLINA. It's a great pleasure to be with you all today.
Jenny. As the Chief Operating Officer of Endiert in Miami Real Estate, you're in touch every week with lots of clients or with all our agents who are out in the field and have direct contact with clients. But my question is, are we really in a chaotic situation with prices in Florida, or are we still in a tense calm?
Look, it depends on the area. For the most part, I'd say it's a tense calm, even in places where it shouldn't be. There's a general sense of tense calm, and it's all because of the information out there, right? There's a lot of sensationalism on the street, and let's not say that all of that information is true. Some of it might be true, but a lot of it is exaggerated. Like you said, my job is to be involved in transactions, in negotiations, to see what's happening, as I say, out on the street. And, what do I see? That there's a lot of negotiation going on in real estate transactions. There are areas where that's not the case. There are areas where properties are really selling at market price, but there are others where you can get. We've been involved in transactions where we've managed to get $30,000, $40,000 off, help from the sellers, and people are managing to buy units below the appraised value. So, there's a tense calm, yes. A lot of people are waiting to see what happens. We understand that they want interest rates to go down, but honestly, right now I've seen plenty of opportunities in the market and sellers who are eager to sell their property and open to negotiating. So, it's really a moment of opportunity. What's happening with prices, Gabriel? I just want to bring you an article from Redfin with a headline that says prices are dropping in 14 of the main cities in the United States, including some in Florida. How many in Florida do we have here? This is an article from Redfin. It says that the two cities in Florida where prices are dropping the most are West Palm Beach, with a 4.9% decrease, and Jacksonville, with a 3.1% decrease. The city with the biggest price drop is Oakland, California, with 6.8%. We can see that these aren't alarming numbers. Gabriel, in a few moments, is going to go deeper into the decline in the other counties. In fact, based on some applications, there are some numbers that are higher than these, but it's not a crash. We're coming from a period where prices went up 40 or 50% in 5 years, so for them to drop 5%, 6%, 7%, that's natural. It's just a readjustment. Price is important. Interest rates are important. Property taxes are important too. There are a lot of factors that go into that monthly payment. So, what's happened with the monthly payment? On average, it's $2,671. That's a little below the all-time high that's held as the national average. This means that affordability hasn't really improved much. However, the interest is still there. We have a lot of buyers who are waiting, and I want to show you here the tourism activity. It's a 35% increase since the beginning of the year. And if we compare it to 2024, it's only 20%. This means that people are interested. When I say tourism activity, I mean visits to properties. There are people going to see the properties, they're choosing which ones they want to buy, and they're simply waiting for interest rates to go down. My advice is, maybe if you have a number in mind today, it's important to make offers and see if the price you're interested in, if that monthly payment you want to achieve, can be reached. I just mentioned insurance, Gabriel, and I know you have important information about property insurance.
Yes, Jenny, when it comes to the topic of insurance, we're certainly in a very stressful situation for many individuals and numerous families who are clearly seeing how insurance costs have been steadily going up year after year. This chart, in general, shows us all of the United States, and we can see how Florida is among those with $5,000 or more as the annual insurance cost. Basically, everything that's in the Sun Belt, in the hurricane influence zone, and in the tornado zone, which is really in the center of the United States. But Florida has been increasingly impacted when it comes to insurance. And there's an interesting article that helps us see what's happening, what the affordability crisis is, and whether there's any solution to what's going on. I highlighted some very important points. According to this data company, Matic, the average policy premium currently stands at $2,000, which represents a 9.3% increase compared to 2024. That is to say, in the United States overall, insurance premiums are going up, but from 2023 to 2024, they were rising by 18%. In other words, they're increasing at a slower pace, but they're still going up. You can see it here, 2.5, 5.2. Then from 2022 to 2023, it went up 11, from 2023 to 2024, 18, and then 9.3. People ask, but why is it going up so much? One of the main factors you have to keep in mind is that in areas like Florida, we've been hit by more hurricanes than we usually had before, especially in the Gulf Coast area of America. Hurricanes have repeatedly hit between Sarasota, Tampa, Cape Coral, and this has really made insurance companies have to, pay much more than they would normally be paying, on top of the fact that home values have indeed gone up and reached very high levels. We're talking about 50% on average in Florida over the last 5 years, which makes the replacement value or the insured value much higher. In other words, what the insurance company says is, if I have a home and I insured it for $2,000 in 2019, and the value of the home goes up by 50%, now I have to insure it for $3,000, because that's the replacement value of the home, and the cost of construction materials also went up, labor costs went up too, and that has a direct impact. It's the same as with taxes. Why do taxes keep going up? Because unfortunately, the value of homes has gone up to really high numbers, and that means you have to pay more. Then, continuing with the analysis, they really look into things. For example, they look at which areas saw the biggest price increases: Mississippi, Colorado, Texas, Georgia, and New York. What's interesting to see here, Jenny, is that among the 5 states with the biggest increase in policy rates, Florida isn't one of them. So, it's a bit of relief in the middle of the tragedy. Why isn't Florida on the list? Because Florida already went up enough between 2023 and 2024, and I think there's nothing left to raise for now. Additionally, there has been legislation from the governor's office, from the state capitol and Governor DeSantis, which has put a stop to issues related to fraud. There used to be a lot of fraud in Florida. They've cracked down on all that fraud, and that has also really helped insurance companies catch a break with this. There's something interesting, which is that deductibles have gone up. So that affects everyone because it sounds great to say premiums haven't increased, but then they raise your deductible. In other words, the part of the insurance that won't be covered when you file a claim has also increased. It says another key trend is the increase in policy deductibles. The data shows a 24.5% increase in the average deductible between 2024 and 2025, compared to 15% the previous year. That is, if your policy covers $100,000, the first $25,000 are deductible. I won't cover those. I'll cover you after the $25,000. That's what's happening now, when before it was only 15%. It's a way for insurance companies to lower the insured value and also protect themselves from fraud, because a lot of fraud happens in those initial amounts, so they don't have to cover them because of the deductible. Additionally, it says, all eyes are on the rooftops. Roofs have been one of the major factors, Jenny, that have been damaged by natural events, and the number of claims for damaged roofs has increased by 30% compared to 2022. What are they doing about that? The difference between the premium for roofs less than 5 years old and those between 11 and 15 years old was $49 in 2022. That is, if you had a roof that was 5 years old and one that was more than 10, the difference you would pay in your premium was $49. At this point, it's already $155. The premium to cover the roof if it's more than 10 years old has tripled, and 10 years is not an old roof. Let's remember that roofs last 25, 30, even up to 50 years. Additionally, those roof claims have an impact because, they also have what's called actual cash value coverage or the implementation of payment plans for roofs. What do they mean by that? What they mean is that now they either finance a new roof for you, in other words, they no longer replace your roof at 100%, but instead, they look at how to evaluate the roof, or they only pay for the area that's damaged, or they value the roof at what the original roof was worth. They start coming up with ways not to insure your roof at 100%, and they give you cases like this. A roof can be covered at 100% of the replacement cost when it's new. But once it reaches 10 years old, the coverage might drop to 60%. So, if I have a new roof, I'll cover it if it's damaged by a hurricane, but if your roof is more than 10 years old, I only give you 60%. In other words, insurance companies start looking for ways to get around things, and the one who gets affected is the customer, because, okay, you might pay a lower premium or the same premium, but you could end up in a situation like that. Lastly, Jenny, we have the issue of deductibles and surpluses. Supplemental policies have started to become more common. I have a primary policy and then I get an excess or surplus policy. What my policy A doesn't cover, I put under policy B. These types of policies have grown from 2% in 2023 to 17% in 3 different states. Why is that? Those states are California, Texas, and Florida. Because people have to insure their homes. Natural disasters come, and one insurance company won't help them. So now they're making it possible to insure with 2 policies at the same time. But even so, it's a very high price they're paying. What has this led to as a consequence, Jenny? That even owners or new buyers are having a hard time. 64% of lending institutions, meaning banks, report that they've had some kind of problem frequently or somewhat frequently over the past year. It's very difficult to insure a home, you know that. We've been struggling every time we enter into a transaction to get an insurance policy that fits and, in addition, doesn't affect the monthly payment or disqualify the buyer. It's a struggle. If you need help, we'd be happy to refer you to some of our insurance agents, but it's complicated to get an insurance policy that truly guarantees coverage. In other words, the situation is critical and it's going to stay that way. Jenny, let's keep looking at exactly how to negotiate and how to get into a transaction and come out successfully.
And then, yes, I have 2 articles from our blog, and right now the biggest advantage for the buyer is negotiation. And this article has a message that says, a good purchase doesn't depend on paying less, but on negotiating better. So, what does that mean? Nowadays, in Florida, there are many areas where there's an excess of inventory. You could say the market is on pause. Sellers, people who want to sell their property, aren't getting offers, but they're also not willing to lower the price much. They're not giving me units away. Can you find a good deal? Yes, we found quite a few good deals, but in different ways. And a good deal is defined as something that fits the buyer, something where, let's say, a buyer tells me, Jenny, look, you know what? I don't have cash. I have the ability to pay, but I don't have cash. I need the seller to help me with X amount of money. It's really not about lowering the price. Many times, it's about finding certain benefits from the seller's side that help you pay the closing costs, lower the interest rate, so you, as the buyer, don't end up without liquidity. Honestly, and that scenario is happening right now in Miami and in Florida. Additionally, I have another blog post that says, Good news for buyers in Miami. More stable mortgage rates and more options for planning a move. That's absolutely true. Even though rates haven't dropped to where we all like them to be, the big advantage is that they're stable. Why is that? Last year, you would enter into a transaction, say with an interest rate of 6.8%, and probably within 15 days it would be at 7.3. It was very difficult to ensure a transaction didn't carry high risk when interest rates were so volatile. Well, even though they're, let's say, not in the ideal range, they're high and supposed to go down at the end of the month, at the end of the year. The fact that their stability gives you, as a buyer, the ability to plan your move, which is a pretty big benefit. And if you're an investor and want to buy properties, it gives you the option to really crunch the numbers and see if this investment will have a monthly payment. If you buy with financing, a monthly payment that works for you. So, what's happening nowadays? More inventory, room for negotiation, and stable mortgage rates opens a door for you to negotiate, just like I mentioned in the podcast on Monday or Sunday. If you want to wait because you want to wait for interest rates to go down, get ready. Get ready financially, raise your credit score, lower your debts, so that in addition to the drop in interest rates, you can also benefit from getting a better rate because you have a really strong buyer profile. I know, Gabriel, that now we're going to look at the state of Florida and see how prices have dropped and what the inventory is like in the state overall.
Yes, Jenny, we're in an interesting situation in Florida and exactly at the point you mentioned, negotiation. When we analyze this map of our beloved state of Florida and see here how home values have grown year over year, we can see that, in fact, in all the metropolitan areas we're seeing a decrease in home values. It's small, but it's there. When we look at it in contrast with this other map, which shows how much they've grown over the last 5 years, it doesn't make me feel so bad. Because I say, if in the last 5 years we have areas like Orlando growing by 47%, or Miami growing by 56%, and Tampa by 51%. But in the last year, we have 3% for Orlando, 3% for Miami, and 5% for Tampa. We're really not doing that badly. What we're experiencing is just a slight correction, calmly, because we Hispanics often want to be in the spotlight, in the news, in what's trending. So, let's see, and in a way, we're always kind of drawn to chaos, to problems, to whatever's going on. When prices went up, everyone was cheering. Wow! We're making money. My house is worth so much now. It's worth so much more. But when the tax bill arrived, what's going on? I can't handle these taxes. Oh, so now you don't like it when prices go up, but you do like it when you sell, or when you go on Zillow and see your home's value has skyrocketed. We're at a point now where we're seeing a correction. So now people are saying, prices are dropping, what a disaster, everything's crashed. But that's just coming off the crazy increase we had here. If we have this kind of surge, we can't be surprised that there's a dip or we'll have to wait and see what happens next. Where is this coming from? Let's take a look at it here. This comes from the growth in inventory. Let's show the inventory, increasing. Let's look here at how the inventory is year-over-year inventory growth, and we can see it here. In Orlando, it grew by 26%. In Fort Lauderdale, it grew by 30% over the past year, and now it's growing by 22%. Obviously, if there's more supply, there's more room for negotiation, and prices can go down. It's a natural reaction. There are areas that are hit a bit harder and others a bit less. Let's take a look precisely at this issue of price. Areas that have been hit harder, Punta Gorda at 11.1%, which, however, when we look at that 11.1% and put it on a yearly basis, but we see it here, look at how this curve behaves. It's a curve that since 2020 was growing by 4, 20%, 38%. Then it drops to 1.4, 3.5, 11.1. We're still well above what's shown here, because when we look at the value of housing prices in the same way, take a look at how housing has gone from $223,000 in 2020 to $313,000. In reality, housing prices have decreased, but not enough to say, folks, it's losing value. So, is the person who bought here losing out? Yes. How many people bought at the peak? Not too many bought at the peak. Most homeowners bought here. And remember, 60% of homes in the United States have no mortgage. That is, they already fully own their homes and don't have to worry about losing them if they can't pay the bank. When we keep analyzing the map, we can see, for example, price cuts, how price reductions are looking. We're only seeing red levels when it comes to Tampa, with 34.9%. That means, out of every 100 homes, 35 have some kind of price reduction or there's a price negotiation. In Orlando, it's 31, and in Miami, it's still 20%. When we also look at days on the market, which is interesting to know, we see that days on the market are going up, and that's why there's a lot more negotiation. Jenny, just like you mentioned, 88 days in the Miami, Fort Lauderdale area, but there's something interesting. When we break it down by county in the Miami and Fort Lauderdale area, we realize that Miami-Dade is already surpassing Broward and Palm Beach in days on the market. However, this doesn't break down what's a condo versus what's a single-family home. And that statistic really changes everything. Why? Because, in fact, condos are staying on the market for a lot more days compared to single-family homes, which aren't having the same issue and are selling much, much faster. If we look at counties like Collier, Lee, or Charlotte, we do see more than 100 days, which makes the situation a bit more serious. Jenny, we're at a point where, to me, we're at the lowest part of the valley. We're seeing interest rates at 6.63, rates that have been going down. All of this is going to allow many more people to qualify. It's going to move the market, just like we talk about with everyone who has the golden handcuffs or the golden cage, that is, all those sellers who aren't selling because they don't want to give up their 3% rate. Maybe now, with interest rates at 6.5 within a year, this map is simply going to become history, and we're going to see Florida as a very hot area again, just like it is. It's truly one of the hottest states in the United States when it comes to the housing sector. How do we wrap up the podcast?
Look, my closing thought is, what's happening, rather than being alarming, I see it as healthy. And negotiation is healthy. The fact that I can come in and present an offer to a seller and have the chance to negotiate and have the opportunity to, in some way, show them my price. That is, I'm offering this for this. This is healthy. What wasn't healthy was lines just to see properties. It's really not alarming. Honestly, I think such a drastic change in market conditions over 2 years hasn't affected prices the way it should have, simply because there's no inventory. There's not enough inventory. We see that there's an increase in inventory. Yes, there's an increase in inventory, but that doesn't mean it's enough for the population. Really, my conclusion is, negotiation is healthy, prices are indeed going down, inventory is indeed increasing, and that's favorable for the real estate market movement at the state level. Any questions? There's a direct link below to our WhatsApp. Contact us. We have a team that will give you the best advice, the best guidance on how you should act. We'll provide you with the data so you can make the best decision, hand in hand with us, fully informed, so you can be confident in what you're going to do.
That's right. Don't forget to give the video a thumbs up, which tells the platform it's quality content so it gets shared. Also, please share it. If you know someone who's interested in all of this, share it, because you're passing along a gem of information where our team is doing the research and we're bringing it to you in the best way, with the top real estate agents in Florida. Lastly, don't forget to subscribe to our channel. We have 4 podcasts a week with the best of real estate in the United States, in Florida, and of course, our financial podcast, Where to Live in Miami. Podcast, a production of Invest in Miami Real Estate. Total transparency.